Most traders are doing exactly the opposite of what smart money does. They buy when price is expensive and they sell when price is actually cheap. And then they get to wonder why price actually first took them out before heading their direction. In this video, I'll be showing you guys one concept that completely changed how I view the market. What's up everyone, welcome to Forex with Joshua YouTube channel. If you are new here, make sure you hit that subscribe button, like this video, and make sure you watch this video to the end. In today's video, we'll simply be talking about the premium and discount price. Once you understand this concept, you stop chasing price and start looking for high probability. So without further ado, let's start the class. Alright, so in today's video, we'll be talking about the very simplest topic, which is the premium and discount price, which is actually very simple, right? And in this video, we're actually going to talk about the 3 steps that we're going to be following in order for us to actually do what? In order for us to actually map up our premium and discount price. And like I said earlier, once you master this concept, we are going to stop chasing price and start looking for high probability entries. So step number 1, what we're going to be doing is identifying our swing high and our swing low on whatever time frame that you are on, whether on the daily, whether on the 1 hour, 4 hour, 15 minutes, 5 minutes, whichever time frame that you're going to be on, right? And number 2, we're going to be using our Fibonacci tool to actually understand our premium and discount price. So we're going to drag our Fibonacci tool from the swing high to the swing low, or vice versa, depending on what trend you're actually in, right? After that, we're going to be looking or working with the 0.5, which is the fair value price. When price is above the 0.5, which is this midline, we are looking for premium price or areas of interest to actually sell price from. When price is in our discount price, we are looking to buy price because it is cheaper. So this is exactly how we're going to be working with, and this is our framework that we're going to be working with. In this video, I'm going to show you guys how I managed to catch this exact trade, right? This was a trade that I took last week, and I actually managed to catch 100% of this trade without stress, only understanding the simple concept that actually changed how I trade today. So starting with, let me just delete everything and let us take price back to this point here. So when we look at this particular piece, right, that we're having here, right, we get to understand that the first thing that we are looking for is to identify our swing high, which is this particular point here. We're going to label this as our swing high. And we're going to label this point as our current swing low that we have right now. This will be our swing low. So now we can see that the market pushed to the downside, creating this previous low, pushed to the upside, creating this current high, and pushed down, creating what? This current low that we have right now. So this simply means that this area here is our break of structure. So let us just name this as our BOS, as our break of structure. So now that I understand my swing high and swing low, the first thing is that I've mapped out, I've identified my swing high and swing low. Second two, I've identified my swing high and swing low, as well as my break of structure. So now the second thing that I'm going to do, or the third thing rather that I'm going to do, is to identify my area of interest. So right now we can see that we're having this as our areas of interest. We have that as our, and this fair value gap here as our area of what? As our area of interest. So now I'm confused as a trader, and most of other traders are also going to be confused looking at what area are they going to actually take, because this is an order block and that's a fair value gap here. So you find that, so instead of chasing price and chasing areas of interest, we're going to understand exactly where we have to sell from, or exactly where we have to look for areas of interest, simply by using what? Simply by using our our premium and discount price. So what we're going to do here is that you can simply use your Fibonacci, right? So you can simply get your Fibonacci when you head to this when you head to over to this particular point. You're actually going to look for your Fibonacci here. So this is your Fibonacci retracement that I'm using. So once you move to this particular point, once you move to, let me get it again. So once you get your Fibonacci tool, which is your Fibonacci retracement, right? This is how it's going to look. So let me just take it back to default. Let me take it back to default. So, okay, so this is how it's going to be as your default Fibonacci, right? So what we want to do here is to stretch from our highest point. Since we are in a downtrend, we are stretching from the highest point to the lowest point, looking for selling opportunities in the premium price. So now this is what you're going to see whenever you use your Fibonacci for the very first time, especially on your TradingView platform. So now after that, we're going to change these levels into these levels that we are going to, so that I'm going to show you, right? So now these are the levels that are on your default. So what we're going to do is that we're going to turn off all these 1, 2, 3, 4 and 5, 6, 7, 8. So now as you are seeing right now, I've actually managed to turn off 8, and I'm only remaining with 0 and 1 and 0.5. So this 0.5 is actually known as your fair value price. This is your midpoint between your premium and discount price. So I'm just going to head over to this point as well. I like putting my labels to the right. I'm going to turn off the prices, so I'm only able to see the 0.5. I'm going to increase the font a bit here so that we're able to see the 0.5, right? All right. So we can see now clearly that we have our current swing high and our current swing low at this particular point. And we have actually, and what I've done here is that I've actually stretched my Fibonacci starting from a higher point to what? To a low point. I've actually stretched from a higher point to a low point. So to not get confused, let me just switch this color to a gray one. All right. So we can see that we have got the fair value price, which is the 0.5, and we're going to discover that above this price is known, above the 0.5 price is known to be in our premium price, in our premium price, and below the 0.5, let me do this. And below the 0.5 price is actually known to be what? To be in a discount price. So now that's our premium price here. This is our premium price, and this is our discount price. So now the midpoint of the Fibonacci, which is the 0.5, is known to be what? Our fair value price. So now the rules are actually very simple. The rules are actually very simple. So above the 0.5 price is known to be in a premium price. That means the further price goes above the 0.5, the more expensive it becomes, and more and the high probability of it doing what? Coming back down, selling. And the lower price gets into our discount price or below our 0.5, the cheaper it becomes. So when price in our discount price, we expect price to do what? To extremely buy. So now this simply tells us that when we are looking for areas of interest, instead of chasing price, entering at this particular point or any other price, we're trying to find out at what price level are we going to enter from. We are going to use the premium and discount price. So I know for the fact that any area of interest, any order block, fair value gap, Fibonacci levels that are around this particular point, or any area of interest around this particular point, it's of low probability. So I'm not obviously going to focus on that. And I know for the fact that areas of interest, whether your Fibonacci, fair value gap, order block, whatever you look out for, right? Whatever area of interest or point of interest that you are looking for that's above the 0.5, and the further it is from the 0.5, the high probability it becomes. So the further it is, the high probability it comes. So instead of chasing price, you forget to discover that as much as this point is your, let's say you've got your area of interest 1 and this is your area of interest 2. So you now understand for the fact that this is going to be of low probability and this is going to be of high probability. So most traders, you find that most traders that entered around this area here, hoping to do what? Hoping to actually catch this sell. Obviously, they were also looking to do what? To target this low and eventually take their profits from there. So you find that a lot of traders that entered here, placing their stop losses above this week or around that region, you'll find that this is what exactly happened. So you find that price actually took them out simply because an area of interest that's close to 0.5 is known to be of low probability. So now we are going to cancel this now that we know that we don't actually sell when we are in a downtrend and looking for selling opportunities. We're not going to sell around the 0.5, but we're going to look for what? For selling opportunities further from the 0.5. So now let's see what actually happened here. So this simply means that this area of interest is of high probability. So now if I was looking for selling opportunities around this area, of which I was, this is what I did last week, right? So let me just extend that and that as well. All right, so like that. So we're obviously going to be targeting this swing low as your TP1 and targeting this point as your what? As your TP2. When it comes to your risk to reward, right, it all depends on what ratio you're actually looking at, and especially when it comes to your stop loss, it actually depends on what pips you're actually looking to place your stop loss, right? So now let's imagine this is what we have. Let's imagine this is what we had, right? Let me just remove this, that we know that we're in a premium price, right? And that. Okay. So we can see that in the premium price, we are only remaining with what? That area of interest. So now let's watch exactly what happened. So we can see that price tapped into or triggered our entries here. If you had your pending orders, or if you were planning to execute them manually, you could have executed them there and your stop loss around that particular point. So now let's watch closely what happened. What exactly happened? We can see that price started spiking down. That's what started happening. We can see how price nicely started pushing towards the downside. From there, what happened? Price touched our TP1 and our TP2. So this is exactly how easy price or trading becomes once you understand concept of premium and discount price. You stop chasing the market and start looking for high probabilities of where you're going to actually place your entries. So this is what I had for you today. See you in the next video, and don't forget to comment what topic you would love me to create a video on, and make sure you subscribe, like, and turn on the notification bell. See you in the next video.